And
end of that music. Oh, Emily, listen, I stepped on your toes. I'm gonna shut up right now.
you're getting your head chopped off. I mean, we're not even doing Queen's Court yet. Like, you're just done. Get them out of here, like right now. Welcome out, everybody, to another edition of the Halftime Report. It is Tuesday, last day of November, and the markets are going down. We're going to get into that. Later on, we're going to get into Queen's Court. We've got a special guest joining us here on a Tuesday. Mark, how are you?
Listen, markets pushing support levels get me involved real quick, right? Gotta come. I gotta come hang. If my portfolio is gonna bleed, I gotta be with the finest people while it happens.
And this is the place to be. Welcome out, Team Tackle. It's great to have you here. Matt, how are you doing today?
I am doing much better than the marketplace is. I can tell you that. A little bit of an all sell everything last 2 of the last 3 market days, and Mark shows up when market volatility hits. He likes to find those support levels where he can start issuing those naked puts and start building the confidence. And I for one love it. And I'm excited to be here with the crew. Had a great step system last night with the team, and just wanted to give a shout out to the community because you guys were awesome last night. And Discord's been popping for the mastermind, for the step system mastermind over the last few hours as well. So you guys are kicking tail and taking names. Really appreciate that. So had some fun there. But now the market today, volatility has not subsided. We haven't seen the true damage yet. It's going to be an interesting market to navigate today.
It sure will be. So let's get right into it. Give me a read on the S&P, please.
Yeah, let's take a look at this from a technical perspective. And as we do so, I want to have a little bit of a conversation on the news that is driving the market. But we'll get into Jay Powell's commentary on tapering here in just a moment. And I want to get Coach Mark's take on the Omicron. Look at that, no N, Omicron. Getting there with the new Omicron virus and all the updates there as well. Technically, volatility came to the market on post-Thanksgiving Friday. We've really seen this up and down nature of the market, and again, while uncertainty persists, and let me just give you 2 statements really quickly, okay? Let me just give you 2 statements, and I'll tell you, and this will kind of give you an indication of where the market's mindset is right now, because again, the market will price in almost anything, good or bad. Does not care. It's just good news comes out, bad news comes out. They price in, they move in that direction. When uncertainty persists, it becomes crazy volatile, and the price action becomes really up and down type volatility, and that's what we're seeing right now. And so when you're looking at just 2 comments from Jay Powell today, you'll kind of see where the market's head is, because it's difficult to get a projection on where we're at right now. Here's Jay Powell. Prepared statements to Congress this morning. The recent rise in COVID-19 cases and the emergence of the Omicron variant poses downside risk to employment and economic activity and uncertainty for inflation. That's a concerning statement. And we've seen that concerning statement from Jay Powell more times than I can count in the last 18 months. And at every point, we've seen a statement like that from Jay Powell. What has always transpired with monetary policy? What's happened next, Mark? When there's uncertainty to the economy, uncertainty to the labor market,
the easiest
what happens
playbook
next?
in the history since the financial crisis in 2008, 2009. It's the easiest playbook.
Yeah.
Economic uncertainty means more liquidity in one form or another.
100%.
It has been a 13-year playbook of with perfect consistency. If there is uncertainty in the economy, heck, if the economy is good and the market just sells off.
Now,
Powell pivots if he was hawkish.
In a statement like that, Chucky, you would expect either them to maintain their current monetary policy or maybe even come off that monetary policy a little bit. We've seen Powell pivot historically very quickly. In a question from Congress today, Powell responds on tapering to this. Because remember the tapering conversation we've been having. 6-month program. We're going to taper by the end of the second quarter next year, somewhere around June of next year. Powell on tapering today says, at this point, the economy is, now again, what he just said in the prepared remarks, the emergence of the Omicron variant poses downside risk to employment and economic activity and uncertainty to the inflationary scale. Powell on tapering, at this point, the economy is strong and inflation pressures are high, and is therefore appropriate, in my view, to consider wrapping up tapering of asset purchases, and expect to discuss this at the next meeting. And we're talking 2 to 3 month, quickening the pace of tapering. Those two statements from Powell today, one the prepared remarks to Congress and one a response to a question, it is very difficult to square those if you have an understanding of the history of monetary policy over the last 13 years, and specifically understand how Powell has used these moments of uncertainty to justify more liquidity to the market. That's what the market heard today. The market heard today on the overnight action. We'll get into some of the Omicron news that really sparked a little of the volatility on the overnight action. But today, when you're looking at this cash open here, let's go to that 30-minute chart. Here's the Omicron news that came out last night. Now, yesterday, what transpired, I want to get Mark's take on this. Yesterday, the Moderna CEO said, and we talked about this yesterday, regarding the number one question the Omicron virus poses is whether or not the vaccines are effective. Correct, Mark?
Yeah, no, I mean, it was about midnight my time. I can't remember what time.
Midnight your time is right here, bro.
Yeah,
for the volatility right there.
I was having a nice cup of eggnog, watching some Walking Dead, season 3, The Governor, just having a nice wind down.
Nobody has a cup of eggnog at midnight, bro.
And I go to check the futures, and just like last thing, which I should stop doing before I go to bed. And I was like, oh, come on. And so I was digging into what the Moderna CEO said. Do you want I'll dig up the exact quote.
I'll just give you the gist here. Basically, the Moderna CEO said yesterday in an interview that there could be a drop in the efficacy of the new vaccine. Later on, Regeneron and Eli Lilly, who have anti-drug cocktails that fight against the vaccine, they said in studies it is shown to reduce effectiveness. And so the open question yesterday was whether or not the vaccines, and it's still an open question, by the way. There's the scientific community is saying we need more time to study this. The next couple of weeks, we should get a little bit more answers. But as of right now, Moderna says there will be a drop in the efficacy of the vaccine. Number two, Regeneron and Eli Lilly say that their antibody drug cocktails have shown to reduce effectiveness as well. That's where we're at right now. We're still in this moment of uncertainty, and all of a sudden you see the market start building yesterday, a little bit of a, overextended sell-off on Friday. The market starts building, but then it starts showing a little bit of weakness here at that 200-day moving average, which is also the previous pivot point right there around that 46.60 level. Starts to show a little bit of double top. European market opens up here. Prices in the news. Here's Jay Powell. Market's trying to recover all through the morning. Nothing, and all through the overnight action. There's not really a change in behavior here technically. But then this morning during the cash open, right here, about an hour after the cash open, because the cash open is actually fairly decent today.
Yeah, the cash open wasn't shabby.
It was about an hour later when the prepared statements of the market came out, and then he started talking about inflation. And the market simply, I think the market today is simply having the same moment that we are, trying to square those two statements from Powell. The economy is strong, doing great, everything's great out there. And then an hour later, oh wait, guys, hold up. The recent rise in COVID-19 cases and the emergence of Omicron variant poses downside risk. Those are very difficult to square as market participants. And I think we're now in this moment of What is the Fed going to do with monetary policy yet again?
No,
Isn't it times like this where the Fed needs to be crystal clear on monetary policy? 100% transparent? Give
it
us
would
your projections.
no, a couple quotes out of Powell's Q&A session with senators this morning. He can consider wrapping up taper a few months sooner. Market was not expecting that.
I wasn't expecting that.
And then he said it's probably a good time to retire the word transitory with regards to inflation. A word that he
made
just 10 days ago.
Yeah.
That he has used. I mean, he's like, it's time to retire. That is an admission on inflation.
I got something else it's time to retire.
Yeah.
They both might be right there speaking in front of the Senate Finance Committee today. I'll tell you that.
Yeah,
but we'll save that diatribe for another time. Here's the reality, though. The price action of the market is showing you the market's mentality towards the news cycle over the last 72 hours of trading. There is simply uncertainty right now. And the volatility in the market, in my opinion, is going to maintain a little bit of an up and down nature of the market until we start getting a little bit more certainty. And especially because I think there is a little bit of the uncertainty is building a little bit of fear in the market as well, given the fact that we have a long history of understanding how this virus impacts the markets. With the Fed signaling today that they're not going to provide monetary support to this, that poses a change in monetary behavior that I think we're going to take a little bit of time as market participants to understand. And in that same time frame, the market is also trying to understand how significant the risk to the market is that the Omicron virus or variant does actually pose to the market. Whether it's a week, 2 weeks, I don't know. But I feel like we're going to get some answers to that in more of a shorter term than a longer term. What are your thoughts, Mark?
I mean, this has been the combination of a nasty 1-2 punch on sentiment, right? Like, what do you want me to address first, in my opinion? Because I mean, I've been thinking about this nonstop.
Yeah, it's a hard one. It is, because this is fundamentally a change in how Jay Powell has handled monetary policy after the recession that the pandemic was really kind of led to.
I mean, there's been when you go to message boards, when you talk to, there's the saying, the Fed has your back. Jay Powell has your back. Jay Powell,
today.
Money printer go burr, right? I mean, all of these clever things that have served as such a huge buy the dip, right? Nothing can ever go wrong because the Fed's got your back. They'll never let this market fail. And when you have something, and that has been a strong narrative for a lot longer since the pandemic lows, right? That has been like going back a long, long time. And when you see on in the height of a new story, the Fed do the exact opposite of what the market and most market participants, including myself, anticipated. I did not expect that today at all.
No, and honestly, Mark, I could have fully expected a statement that goes with the recent rise in COVID-19 cases and the emergence of the Omicron variant poses downside risk to employment and economic activity and uncertainty in foreign inflation. And thus, due to that uncertainty, we're going to curtail the tapering pace. Instead of 20 billion, we're going to do 10 billion to give us a little bit of time to understand the economic risk here.
Yeah, I mean, that's what you expected.
I understand that. I understand this statement. Powell on tapering. At this point, the economy is strong and inflation pressures are high, and therefore it is appropriate, in my view, to consider wrapping up tapering of asset purchases. I understand that statement too, if it's not following the recent rise in COVID cases poses a downside risk. It's hard to square those two statements with monetary policy. That's very difficult to do, in my opinion. And so it provided a little bit of volatility today. And that's not what I feel the central bank, the leader of the central bank, should do on in an environment where we're dealing with a tremendous amount of uncertainty. They're supposed to provide a calming, cool, transparent, easy to understand. And that's not what's happening today, which means I'm willing to bet he gets talked to tonight. We'll see what he has to say
No,
tomorrow.
I mean, and that's the thing about Fed job owning, right? You're in front of a Senate panel, and maybe you say things to please the crowd, maybe, or to not have to deal with confrontational aspects. It'll be interesting to see what is telegraphed in the coming days by Fed job owning. And what did Gino say yesterday? I hate a news-driven market. Well, we now got two major news story headlines going on, which can create on any given statement. If Waller comes out tomorrow, or Karkashi comes out tomorrow, or Bernard comes out tomorrow and says, hey, blah blah blah, maybe we should think about. That's all they have to do, right? Maybe we should think about. And and then you could see an algo response and market.
And specifically, Mark, on tapering, he did not say that was the view of the Fed. On tapering, he said, quote, in my view, it is appropriate to discuss the speeding up of tapering. He didn't say it in the Fed's view. He said, in my view, and they're going to discuss it. This was not a policy update. It was an internal thought to a question that I'm willing to bet Powell is going to spend some time on thinking about that answer again, because if you've ever seen a Senate Finance Committee hearing or any political hearing and how they ask questions, they don't ask a question the way normal people ask a question. They will go on a 4-minute soapbox and follow it up with a question, and Powell has to dance around the political environment in that. So oftentimes when you're going through some of this congressional testimony, what will happen is they will revise some of their statements to make them a little bit more consistent. We'll see if Powell has an opportunity to do that. But that is where we're at right now with the volatility in the market. That's where we're at right now with kind of the uncertainty in the market. And until that uncertainty subsides, I gave the analogy yesterday, it's like a dam broke and you're dealing with a flood. You got to let the water subside before you see the true damage. And we're still in that process as market participants right now. We don't know exactly where the floor is because we haven't seen it yet, because the volatility has not slowed down. It is going to be interesting. Now, technically here, there's a couple key points to keep your eye on technically. Number one, the market did find support right here at about 45.80 yesterday. And it's volatile, guys, but it's going to happen when you get these news-driven markets and the market starts pricing in a little bit of the current uncertainty. You see that big downward candle, but where does it start to slow down into? All of this is Powell's remarks here today. It drives down, down, down. And where does the market try to find some support? Look at that hammer candle coming in right there at that 45.80 area. So when you're looking at this intraday speaking, a lot of volatility over the last 3 trading days, but one key intraday level to really kind of focus on, and again, it's threatening a breakdown right now, is that 45.80. Keep an eye on that on the 30-minute chart. When we back this out to the daily chart, there is some really key levels of support that could be a nice technical backstop if this market does break down a little bit further. Number one, you got to be looking at this 50-day moving average, right? We during this nice little market downward cycle here that was really kind of tied to Delta, you had a nice little breakdown against that 50-day, but it really tried to find that before it did. When you go back in time a little bit, the 50-day moving average in moments of volatility has proven to be a pretty decent support level, as you can see here, 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 and here. So when you're looking at the test against the 50-day moving average over the course of the last 5 tests, you got to give it a little bit of a bullish leaning here, as it's proven to be a buyable situation. 4 out of the last 5 tests. One got broke down pretty aggressively there, but over against that.
That was the money by the dip in 2021, right? Pull back to the 50. Pull back to the 50.
And so if it does break that 45.80, and again, I could see a little bit of chop here. It would not surprise me at all. The whole big upward, big down. I see this as volatile right now. I don't think you can get a technical read yet. But again, if we do break down out of that very short-term 45.80 level, you're looking right there at about 45.30, right around that 50-day moving average. So only about a 50-point drop before you start finding some really, really decent support. If it gets underneath 45.30, 4500, that's the kind of that zone we're looking at. Man, it can get a little bit ugly at that point. It can get a little bit ugly, and it wouldn't surprise me to see something down to around the 4400, or even hypothetically all the way down to the 200-day moving average. But right now, you're looking intraday short term at 45.80. If that is violated, the next stop right there at 45.30 by 4500. Underneath that, you're really talking chop all the way down to about the 200-day moving average. And so technically you're in some uncertainty. Politically, you're in some uncertainty. The virus has some uncertainty. It's just one of those environments where, again, there's still good trades to be had, especially on the bear side today. You know, I was going through the bear list in the Skyline report over the weekend. Activision looks good under 60. T-Mobile, getting triggered. AT&T triggered yesterday. DVA triggered. Philip Morris triggered. BBY triggered yesterday. Continuation. VIPS looks strong underneath its support level. Penn looks strong with a breakdown there as well. Weber confirming on the breakdown. OI looking good underneath 11. AR looking good against the reversal. And so there's trades to be had. For certain, there's trades to be had. Even on the bull side, when you're looking at the bull side list, Akamai held its breakout channel, AARY. That got absolutely destroyed. Kick it off, no confirmation. CARG held its confirmed level of 38. DPZ holding the channel really well. Donut kind of got blown up here, so you're seeing a little bit of damage. Ford holds its channel so far, could certainly break down, but holding the channel so far. Gill breaking down. And so you got to update some of those bull lists, but about 75% of the bull list still held its channel here today, even in the face of that volatility. You got to like that. Apple bucking the entire trend of the market. Apple saying, we don't care. You guys are everything. We're an index in and of ourselves. Apple looking very, very, very strong here. So a lot of the bull lists kind of maintained. Some got destroyed as they were fighting some support. Bear lists look really, really good. It's still an environment where you see a trade, you take a trade, you reduce your position, you shorten your time frames. We know the volatility playbook at this point. But at the same time, it is one of those environments where you got to let the volatility subside a little bit before the confidence truly starts building as short-term traders, in my opinion.
Absolutely. No, it's just, there's so much chance of news head. I mean, because you got two storylines. A Fed speaker could come out any day and say, confirm what Powell said, did not confirm. You could have, companies are rushing to test Omicron from a vaccine level. You could get positive data, you could get negative data. So like,
well, are we going to get
stories.
both, Mark? I mean, that's the thing. Over the next week or 2 weeks, right? As Moderna, Pfizer, as the Eli Lillys of the world, the drug cocktail companies, as they go out and they put a tremendous amount into testing their drug cocktails and testing their vaccines, you're going to have good news days and bad news days, correct?
Yes.
Okay. That's why I feel the volatility is going to persist, is as we go through this process of understanding how effective these treatments are, including the vaccines are against the Omicron virus or variant, there's going to be good news and bad news. There's going to be volatility in that. For me, the market is focusing as much, though, not just on this risk that Omicron poses. They're focused as much on the language coming out of the central bank at this point as well. The central bank needs to clear up their language 100%. If as market participants, we're going to go through a news cycle that is going to be a little bit volatile, a little bit uncertain, good news, bad news, the Fed's got to be crystal clear on monetary policy. They can't be wishy-washy. There can't be statements, hypothetically, where we just get the internal thoughts of Jay Powell in Senate testimony. That can't happen. You need transparent and structured data, not opinions here. And so I hope the Fed, and specifically Jay Powell tonight, will think about how they are handling the conversation over the risks that Omicron poses to the economy, and how they are going to adapt their monetary policy to combat that, instead of the wishy-washy nonsense that I felt Jay Powell gave us a little bit today, speaking out of both sides of his mouth. One, the economy's doing great, everything's fantastic out there. Two, it's Omicron poses significant risk to the downside. It can't be both, Jay Powell. It can't be both. And so I hope Jay Powell clears up a little bit of that language so that we understand Fed monetary policy a little bit more clear. Now, on to the Dow Jones very quickly.
No, just one last thing.
Yeah, go ahead, John.
And it's why, as traders, you have to adjust. You have to adjust, based on technical patterns. You adjust. Listen, yesterday I was like, listen, I'm going to, tech safe. What could go wrong with tech, right? It's the COVID playbook, right? Mm-hmm. And then a day later, you get it thrown a hockey storyline. I'm like, all right, so maybe I'm not going to be so aggressive there as maybe. I mean, you just adjust to. There's nothing wrong with being wrong yesterday, as long as you're not also wrong today, right? Based on the information. Don't be stubborn for the sake of being stubborn, right? Just be careful, monitor your patterns, and wait for information.
And that's kind of where my head is at as well. As market participants, we're waiting on two things. Number one, how effective the vaccines are against the Omicron virus, correct? Mm-hmm. And number two, waiting on the Fed to clear up some of the monetary statements from today.
Correct.
Both of those questions can have answers sooner than later. I do not think this is I don't think we're debating this in 2-3 weeks from now.
I don't either.
Right. I think we're going to get some answers sooner than later.
And wouldn't it be nice to get it all resolved, including the debt ceiling, which is just like, listen, this would normally be something we're talking about like in the market cycle right now. But it's like, listen, you got to compete. You got to compete in this world. And you're not debt ceiling. You're just not that important.
Honestly,
right
Chucky, I just had one of those moments where I'm like, I've been so involved in the Fed testimony today, and I've been watching that I totally spaced off the fact that we're going to have a debt ceiling debate here coming up very soon.
Yeah.
That's fun.
Listen,
that's fun.
And listen, I like to try to paint pictures that lead to opportunities.
Yeah.
Wouldn't it be nice, as you're heading into the official Santa Claus rally and then the January effect in the next 2-3 weeks, if you maybe sell off a little bit but form a nice bottoming pattern, all of this gets resolved heading into Christmas season, heading into January, which is, that January effect's pretty strong. Man, listen, I can ask for things for Christmas, right?
All right. So can I, if you're going to ask for that, can I ask technically where that happens?
I would like it to happen at 4,400.
Okay.
The old support level.
I don't know if you would, honestly, because again, when you're talking about where those levels would happen on the S&P, that's fine. But if you're also talking about that on the Dow Jones, you're talking about a violation of the 200-day moving average. And so where I'm kind of looking at this technically, again, the intraday levels that we talked about, those are all intraday levels. Those are like, that's like a hot knife through butter. The market volatility can blow through intraday levels of support with like nothing. That 50-day moving average to me is a nice backstop though. And if you look at the market from an index perspective, and you're looking at the Dow Jones here, S&P slightly above the 50-day moving average, Dow Jones slightly above the 200-day moving average. Has the 200-day moving average proved to be a viable situation in the past? Yes, it has. You see one just recently over the course of the last few months. You see a nice little 200-day moving average bounce literally to the tick here. And so right now you got some fairly significant support levels that can certainly form. We haven't seen them yet because we haven't seen the test yet. The Dow's getting close to that. But you got the S&P right there above the 50-day moving average. You got the Dow Jones hovering right above the 200-day moving average. That's historically been a fairly decent buying zone. The NASDAQ here stuck a little bit of neutrality, stuck a little bit in the volatility cycle, but it doesn't take a rocket scientist or a master technician to understand that 16,000 here is the support level that you're really looking at on the NASDAQ. If that breaks, you're talking about a nice little 500-point downward movement in the NASDAQ before it gets into the 50-day moving average. And then the Russell 2000, it's violated absolutely everything in this volatility cycle. The breakout, the test of the retracements, we are right back into the same pattern that we have been in for a very long time. And again, if you understand that pattern and you were active in that 10-month cycle, again, you know where those levels are. It's 2100 and it is a backstop at 2100. And so you have some more downside pressure technically in front of us. From an index perspective, Dow hovering right above the 200, S&P hovering right above the 50-day moving average, Russell 2000 about 80 points above its major support level at 2100. So it wouldn't surprise me to see as long as the volatility persists, to see a little bit more downward pressure in the marketplace. But let's track those support levels because they could prove to be some fairly decent buying zones for the marketplace. Let's get into the commodities a little bit, and let's talk a little bit about crude oil here, Chucky. Crude oil getting hammered last Friday, little bit of a reprieve yesterday. Upward movement in price got absolutely destroyed though. It's seeing the volatility all the way from yesterday till today, seeing it continue to the downside. Currently hitting 65 here, 65 mark. Major support at 65, very similar to what we talked about in the Russell 2000, that 2100 zone in the neutrality. 65 was that neutrality zone of a support level. Historically, you've seen some very nasty volatility candles get gobbled up right here around 65. You see that day right there on 719. Gets gobbled up at 65. Downward movement in price gets gobbled up at 65. And so we've seen 65 prove to be a support bounce, but we've never seen it get tested with this type of movement to the downside. Mark, what's your technical read on crude oil? 65, is it a zone that interests you, or at this point are you looking lower here?
Well, if you get a 1-2 punch of OPEC cooperation and positive news on Omicron, oil's going to have a face-ripping rally. Now, that's a lot of if and what A equals B equals
But
C.
we should be prepared for that, though.
But like, so, you play out the catalyst. Like, if A happens, OPEC cooperates in some way. If B happens, you get positive news on vaccine efficacy and the variant, oil's going to rip roar. But those are some ifs, ands, or buts.
Yeah.
And in these heavy downward pressures, because it's so tempting, because RSI right now is getting into that oversold territory, right?
Mm-hmm.
And so you're in situations where, when you get into oversold areas, and it's the first time we've been oversold. The last time we were oversold, what happened? A nice reflexive rally that happened for weeks. Now we got a different backdrop right now with Omicron, and things can stay in oversold territory for an extended period of time. It doesn't mean there's no magical indicator that tells you, yep, this is the bottom, right? But that's what indicators are for, though, to help you paint a picture that, we are in oversold territory. If you get positive catalyst, you could get some rip roaring action. I at 70, I certainly at 65, and definitely would in the high 50s, think that oil is a fundamental buy. Now, the demand destruction, and I commented on this yesterday, that in worst case scenarios, the market right now, and this was before today's price action, is predicting demand destruction on a level that is literally worst case scenario.
Mm-hmm.
That is literally worst case scenario. And so you get any positive catalyst, you get any positive signal, but it doesn't mean there can't be downward pressure. So I am extremely interested. I think this is a good opportunity, but it's not for the faint of heart. And you are in a falling knife scenario right now. I mean, those are big candles. The one on Friday, that closed at the bottom. Right now, it's the epitome of a falling knife, and playing with falling knife can be very, very difficult. So the prudent thing is wait for the storyline to develop, wait for technical patterns to develop, wait for something. I mean, my goodness, wait for an intraday signal at least, right? You know, don't try to pick the bottom. If this is a good opportunity, you likely will have opportunities along the way. At least wait for an intraday signal, at least wait for a positive catalyst, something.
I
But
think you're
I'm
combining this, Mark. I think you're looking at this from a daily double bottom scenario. You know, we talked about 70 when crude was hovering between 70 and 75. I mean 75 and 80. We talked about a double bottom scenario plus a breakout, right? I think that's what you're waiting on here. Whether that happened at 75, 70, or 65 or 60, you just don't know. But I think you're waiting on that double bottom scenario in crude oil, and I think you got plenty of time to wait on that technically. Number two, I think you also wait on some positive developments from the headlines perspective. Right now, the way crude is trading is it is pricing in worst case scenario here. And worst case scenario is the Omicron virus poses a significant risk to economic activity around the globe. And that would have an impact on inflation, both in deflation against energy prices, as well as inflation against manufactured goods and goods purchased by consumers. And so the market is pricing in worst case scenario here for crude oil. It's not doing that for the market yet. It's doing it for crude oil. So I do think you wait on a little bit of technical double bottom scenarios. You couple that with a little bit of positive headlines. And again, it could come fairly quickly. OPEC meets tomorrow. We could get some updates very, very quickly. Stay with us as we break that down tomorrow. But again, falling knife scenario, what do they always say? You got to wait for it to hit the ground. You don't try to pick up the falling knife. You don't try to catch it. You pick it up. You wait for it to hit the ground. Double bottom scenario. Wait for a reversal here. But I certainly do agree, as the volatility is currently here, it's a stay away. It's a stay away. As the volatility subsides, you start to get a little bit of slowing momentum, double bottom. You couple that with a little bit of positive headlines. That's where the opportunity persists. Stay with us as we break that down day after day after day. Let's talk a little bit about gold here. Em, I'm going to go to you on this one. Gold, very volatile, Em. Very volatile, wickety-wick nonsense, absolutely everywhere. Little bit of a deeper pullback now getting violated. That 1780 intraday is getting violated here. What's your read on gold? Is this a breakdown to you, or is this a stay away?
It is a stairway for me for now because we violated all the moving averages. I gotta wait to see if it's gonna find support at that 1760 level, maybe for me to even consider it. But for now, it's kind of sitting in no man's land for me. So I'm gonna wait. It looks like a reverse cup and handle situation happening there on that daily chart. So definitely gonna give it a little bit of a wait and see where it finds a floor, which is, kind of like around that 1760. 1716. So, and of course that 1700 is a significant whole number as well. So it could test that as well. But for me right now, gold is a stay away.
Yeah, I think the daily chart's got to settle down a little bit, right? I think the daily chart's got to settle down. And when you have a perspective that the daily chart's volatility needs to settle down, let this weekly chart develop, right? This weekly chart could look a lot differently on Friday than it does here on a Tuesday, right? And so if you, like, for example, if you get a little bit of upward moves in price over the next couple trading days and this candle turns green, people like traders going to look at that on that weekly chart, looking at that as a buying opportunity. And so I certainly agree that in the short term, the daily cycle is really volatile, really volatile. I think we got to give gold a little bit of time to really prove out those support levels. And as that does it, if it answers the support level question to the affirmative, this weekly chart will start looking a little bit better, but we're not there yet. Chuck, you want to get your take on copper today? /HG kind of stuck in mud on the weekly chart. Copper being very economically sensitive is not taking the beating though.
Yeah, no, Dr. Copper, Dr.
taking.
Copper's having a moderate view. It makes me like that oil sell-off more when I see this. It's like
Both of them, Mark, are very economically sensitive.
yeah,
correct?
and like when you go to the COVID charts, like in February, March of 2020, they were selling off in tandem. Oil had a little extra hiccup when OPEC decided to create a price war out of nowhere in the midst of COVID, which was fascinating. But they traded in tandem. You're not seeing, you're not seeing that type of panic fear in copper. Uh, that to me is very, very telling. And as long as you see copper behave, like sell off a little bit, risk off day, right?
Do you think
But
maybe the difference in the price charts, because crude's very volatile and copper, honestly, guys, if you were just looking at this chart, you would not think there hasn't been an increase in volatility on copper. Look at the ATR. ATR just kind of hovering there. You haven't seen an increase in volatility, right? You look at crude oil, look at that. Look at that increase in volatility.
it's still selling off.
Yeah, it might even increase its volatility. So I guess the question is, which one do you believe is more representative of the current situation economically? Because both of them are very economically sensitive. Is it copper or is it crude? And I would say copper is a little bit more telling here, because crude also, if I know we're talking Omicron and everything Powell's talking about today, but it's been over the last week. There's governments around the world also adding to that. We're increasing the supply side on oil as well. I'm not sure they would do that today if they saw the price of oil today. But that is also an added pressure on the sell side on oil that copper does not have. And so I do think copper is a little bit more telling of the actual global situation than crude oil is. But again, crude oil's got to settle down. Let's talk a little bit about Bitcoin
I was gonna say,
here.
Matt, you stay on that copper chart much longer. That crude oil, I'm gonna sell naked put.
It's
I
not
won't
time
be
to
able
sell
help
naked
myself.
put yet. It's not time. It's gotta. Hey, Chucky, take your own advice. At least let an intraday.
I did yesterday, and I'm very grateful for that, right? I had the same FOMO yesterday, but I didn't do anything, and very happy,
Can we just wait for even some confirmation?
Well, I gotta at least have it clear the 9 EMA on the 1 minute chart, right?
It's not even doing that right will just lob grenades, but let's like the dam just broke. Let's let the water come out first. Bitcoin though, I gotta tell you, very impressed with Bitcoin. Very impressed with Bitcoin the last few trading days. We talked about this yesterday at length with Bitcoin breaking down the fake out. We talked about the potential breakout from 3 weeks ago, fake out. That proved to be a big selling. Now, can it be proved to be on the opposite side, a good buying opportunity? I think you got to like Bitcoin over the last 3 trading days, honestly. Breakdown got faked out, upward movement of price. And then today, when the entire market is puking up everything, including gold chart being extremely volatile, crude being extremely volatile, copper, S&P, everything extremely volatile today. Bitcoin inside candle, anybody?
No,
it's very surprising, actually.
I have loved the Bitcoin price action. Also had a positive catalyst. India walking back their ban on private crypto ownership, which India has long been, along with China, two of the leading countries to say, nope. India walking that back today. That's a real positive.
That's positive.
If you go to Ethereum, Matt, ETH,
yeah,
/ETH, there's some, like a little bit of juice going on in the crypto space right now. Now, volatile market, all of that good stuff, but there's some juice going on right now, and that price action on Bitcoin, it has every excuse in the world to sell, right? If it wanted to sell, like there's so much risk off attitude, all of that, it's holding its own. I think that's telling.
I think it is telling as well, Chucky, because again, you go back to last Friday and the entire market is puking up everything last Friday. Bitcoin's doing the exact same thing as the market, breaking down. Literally the next day, boom, right back up. The entire market the next trading day, Monday, everything back up. Tuesday, everything back down. Bitcoin's like, no, we're good. I think you got to appreciate that. You got to like that if you're looking at a bull trade. Well, let's take a look at those price thresholds. Yesterday, we talked about 60K being that level. Didn't get up there. It didn't get up there. You got the actual wicks right around 59,890. We're just going to call that 60K. But you see that cash show up, and the market volatility hit Bitcoin as well. Same type of time frame, but it certainly held the channel a little bit better than the rest of the market. I think it lines up that breakout is what it does. I think that's what you're really looking at today, saying I like the price
We go
action.
back to
Could have
that
got
Bitcoin
ugly.
intraday chart, and,
Yeah.
and this is the price action I've been seeing on Bitcoin for days. That when you get some market volatility, whenever it occurs, Bitcoin can get swept up on that. But Bitcoin recovers faster and more immediate and stronger to the upside than the other assets, right? Broad market's still hovering near support, intraday support levels. Crude oil, it's like we're going to zero again, and we're doing it today. You know, but Bitcoin,
we're going to go ding negative 41 again. Let's
Bitcoin
do it.
Gets caught up in that, but then pivots faster. The price action is very, very telling. I don't know how you don't add exposure on a break of 60K. It feels like it's a run situation. That's what my plan is. That's what my plan
The
is.
daily chart isn't great, and you do have that 20-day moving average of about 61 that you have to take a little bit of concern with. But when you're looking at this intraday chart, the market has clearly told you where they're willing to sell.
And that's in the
Right.
traders lounge this morning when we were analyzing this and that. I was like, everybody sees that.
Yeah.
Right. I mean, that's one of those easy to identify resistance levels. You see it here, you see it there, you see it there, you see it today. Like it's there. We all see it now.
Well, and what happens a lot of times, you see that clean trigger above that 60K mark. It's been tested multiple times. Once it breaks out of it, you typically get a little bit of clear air as it starts building back up. And the daily charts aren't pure. By no means are they pure. But you got to like that 60K level. Keep an eye on that as Bitcoin tries to navigate 60K. Coach Mark, Coach M, thank you so much for hanging out with me in the market Skyline and giving me your thoughts on all things market related, from indexes to commodities, Bitcoin, a little bit of currency. It is that time, though, and that time is time for the Queen to step up and do a little edition of Queen's Court here, Emily. I'm excited for Queen's Court today. And Chuck, you haven't been in Queen's Court lately, and basically how we do Queen's
I got
Court
killed
is,
too many times.
well, we had to kick you and Tim out.
I'm
You guys
having
died all the
trauma
time.
right now.
It's like both Tim and Mark are like, I'm just going to troll, and then they act surprised and shocked when they get their head chopped off. It's like, we kill trolls, bro. But
We've
we
kind of
changed a little bit.
you guys left. Yeah.
Emily now comes to us, the panel, whoever's here. Usually it's me, but you're here now too. And she asks us our advice. And if she likes our advice, she takes it. And if she doesn't, she kills Tim. Let's go.
That is pretty much how it goes. Even when Tim's not here, he still finds a way to get killed. But we did have a podcast yesterday on covered calls, which ironically is what I'm going to talk to you guys about. So I am throwing the link for the podcast there. So go ahead and grab, what was that? Episode 453 of
man, it's all like water running downhill at this point with Trading Justice. How many have we done? 453.
Yeah, 453 episodes. So I just dropped the link there in the chat for you guys to grab that. So make sure that you give it a listen on all platforms. But yeah, so
it is absolutely covered call week at Tackle Trading here. We're going to be doing covered calls next Monday, doing a webinar direct to tackle. We're going to do a Tackle Trading 101 series called Introduction or Beginner's Guide to Covered Calls, I believe. So I'll be teaching a covered call webinar next Monday. We'll be doing some tackle shorts on covered calls. We like covered calls, especially in moments like this. We really like covered calls. So Emily, you have some questions on the covered call here today.
So yesterday we kind of switched things up on my lab. We actually had a lab last night, not today because I have some scheduling things going on, but we had a lab last night and we were talking all covered call stuff. So I came up with 3 potential stocks. Actually, there were 5, but we'll look at 3 today. And I may throw the 4th one in just to kind of get your advice, because the markets are kind of picking it up today on how to pick up something as it's, on its way down and waiting for that support, waiting. But anyway, we looked at 3 potential stocks that we were looking to get in right away.
Okay, so you're not in these. These are things you're looking at as a potential covered call.
Yes, this is, we're thinking long-term IRA account.
So can I ask a question very quickly?
Yeah.
Okay, so you're looking to get in, not to a covered call, but you're looking to get into an investment of which you're going to write covered calls.
Correct.
Gotcha. Okay, I'm clear now.
All right. And there were three of them. And we looked at the three of them and we had three different approaches on all three of them. So here's your first one. So I want you to tell me whether this is the approach I should be taking, because we were looking at this last night. Markets were closed, markets are open today. So this is my first potential entry into all of these. First one is AMAT. This is a tackle 25, darling, that we love so much. So looking at yesterday's candle, we're looking at the overall trend, looking at the pattern where it was sitting at yesterday, nice little pullback to those moving averages. So for AMAT, the approach that I was looking to get into was just buy the shares now.
Okay.
And not cover them. Wait until it gets to about that 159, 160 zone and then cover it. So I want to be able to ride a little bit of that appreciation just because of where it was sitting yesterday.
Yeah, you like the retracement, you like the support level, you like the bounce from a couple days ago. You're treating this as a little bit of a bullish retracement. You get in, you ride as it starts to appreciate. Okay.
So that was scenario number one.
Okay. So do you want me to analyze each scenario or have you lay out all scenarios and then break it down as macro?
Let me lay all three of them out.
Awesome. Okay.
All right.
So applied materials number one.
Applied materials, buy the shares now. We're not covering it until we get to resistance, then we cover.
Yep.
That's scenario number one. Apple, next one. So Apple did what AMAT should have done today. So that's it's the reverse. So Apple, I was looking at just getting in and covering it right away. And I was looking at the 165, 167 and a half strikes to cover it. So with Apple, I like the pattern. I like the trend overall. The resistance where Apple was, from where support was sitting at with Apple yesterday to where the resistance level is today, it wasn't that far of a move. So we were just going to cover that right away. We were looking at 165 and again, or 167 and a half to cover.
Yeah.
So Apple, 100 shares and we cover right away. That's scenario number two. Number three. Kroger, KR.
Okay.
This one was interesting because, and the reason I picked this is because we have earnings coming up here this week. And based on our asset allocation, kind of like how we were going to, approach this, we could buy up to 238 shares of Kroger, kind of based on the price.
Yeah.
So with Kroger having earnings, and again, this is, long-term portfolio. We like everything about Kroger. We like the P, we like the PE ratio. We don't care about earnings.
But we're not in Kroger.
But we're not in Kroger yet.
Okay.
So the question is, do I buy now, or do I wait for earnings and buy after earnings, or can I split it in half and maybe buy half now before earnings and then wait till earnings comes out and then get into the other after earnings?
Earnings is something we all have to learn how to navigate on different systems, right? With Delta systems, it's just to stay away. You treat it like you just stay away from it. It's hot stove, do not touch, right? You do not carry, especially in the options market, you just get slaughtered. And so you want to stay away from a directional system around earnings. Earnings carrying volatility systems through earnings are really, really powerful. Theta systems. So if you talk about Delta, Theta, and Vega systems, Delta is directional systems, Theta is cash flow systems, and Vega is volatility systems. So Delta systems are a no-go, no-fly zone, right? Delta systems, they're all about technical edges and probability analysis, and earnings is a 50-50 crapshoot. So no-fly zone for Delta systems. Vega systems, absolutely, they live off volatility, and earnings provides volatility, and so earnings is a lifeblood. It's the blood of volatility system. So absolutely, yes. Straddles, strangles, short strangles, inverted flies, things like that. Creative volatility option strategies designed specifically for earnings. Yes, absolutely. Theta systems can be complicated around earnings because you certainly do hold long-term investments through earnings all the time, right? You don't get out of long-term investments because they report earnings. You carry them through. But if the primary purpose is covered calls, you never carry a covered call through earnings, ever. Never, ever, ever. Have you ever played that game? Never, ever, would I? Never, ever, ever would I carry a covered call through earnings, ever. Now, it doesn't mean you can't cover something through earnings, it just means you have to collar it, right? You have to play the opposite side. You can't lock down your top side and then keep your bottom side uncovered, right? And that's what a covered call does. And so you got to be more into the collaring of that equation, which means you add in out of the money put option to protect against the downside. When you're this tight against earnings, I would say let's just see the numbers. I think we're this tight against earnings. I think we can just see the numbers, because especially right now, if you go look at the reports today that reported today, this is a difficult moment to report earnings in. When you're dealing with as much uncertainty as the market is having right now, and you couple on that EPS numbers, revenue numbers, and guidance numbers, and it's a very difficult time. Most market participants that reported earnings today got beat up a little bit, even in when what you would consider a positive earnings for that company, they still got beat up because of the market volatility. I think we're too tight against earnings here to basically go into a delta neutral cash flow system where you basically write the covered call, add a put option, create a net neutral environment simply to overcome the earnings volatility. I think that's very complicated to do when all we have to do is wait a few days to see the actual results and then make a decision based on the information that the market is giving us. And so I would say on Kroger, and again, Kroger is in that zone for cover calls. There's no doubt about that. It's really, really good cover call stock. And it's something, if you're looking for a little bit of cash flow to the portfolio in a more conservative type company, Kroger really does stand out for that. It really does stand out for that. And if you're talking about an inflationary environment, if you're talking about a negative economic environment, Kroger really stands out there. Cheap food, right? Okay. We might not be buying expensive food a year from now, but I promise you we're buying cheap food a year from now. And so Kroger kind of stands out there. And so I like it for that. I just think we're really tight against earnings, and we probably should wait to see how the market responds, especially in the face of the market volatility here. And that's not too long. We're just talking about a few days. They report on the 2nd. And on a breakout there, and post earnings, you can certainly look at it, but even if a gap down and you start talking about a little bit of the 200-day, I could see both a negative response to earnings, a positive response to earnings. Both can provide a buying opportunity on this. That's why I say, let's see the numbers first. Let's see the market response first. Then we can start talking about how that fits within that portfolio. When it comes to Apple here, and again, you know, I've done enough live market analysis in my life to where you're looking at one data point, you're like, yeah, it's slowing down, market volatility. Let's write those covered calls. Let's go. Right. And then all of a sudden the market's getting spanked. You're like, yeah, I did. I made such a good decision writing that covered call. Why is Apple the only stock up today? You know, I get it. I totally get it, Em. But I'm going to have to disagree a little bit with the Queen on this one. And the reason being is Apple's in that catch-up mode a little bit to Microsoft. And this happens with those two juggernauts a lot. Microsoft's a little bit more consistent than Apple is. Apple will have these robust moments of catch up to Microsoft where all of a sudden Microsoft becomes that big blue chip, the number one company in the world. And Apple's like, wait a second, we got some iPhones to sell. They play catch up really, really quick. And so they're in a little bit of that catch up with Microsoft. And you're talking a little bit about increasing momentum from a trend perspective. And outside the 1 day price cycle that really was just a snapback flag, got gobbled up pretty aggressively. You're looking at this as a little bit of a high base scenario, in my opinion. And in a high base scenario, I really like opening up that risk graph a little bit on the breakout here. Tightening it down, I get during the high base, but high bases can only last 3, 4, 5, 6, 7 days, right? They're not exactly that prolonged neutrality that you want to see that is really good for covered calls. And so I think on Apple here, and I talked about this in the Step System Mastermind group yesterday, it was the first stock we actually looked at. when we were talking about entries versus stops, and we actually liked it from a directional perspective. I certainly see a cash flow expert like yourself coming in and be like, I can wrap a covered call here, but I did like it from a directional perspective. And so Apple's a good covered call stock in general, but it's a good stock for a lot of different systems in general. I like the directional edge here, opening up the little bit of the risk graph. We'll see who's right on that, because again, you sold the 165. We'll see if that plays out. But I actually like opening it up a little bit, even in a generalized market mentality where it's like, let's lock down those risk graphs as much as we can. Apple's kind of bucking that trend, but it's kind of bucked that trend over the course of the last month, over the course of the last couple weeks. Applied Materials here, man, it's in one of those zones where technically you love it.
Yesterday. It was
I mean, technically you love it. You love the retest of 145 here. You could really see a trader coming in and saying, I love the directional nature here, right? I want to look at this 145 support level as a little bit of an opportunity to pick up the stock. And as the trend starts building, once it shows some weakness at resistance, write that covered call out of the money. We know the playbook of covered calls on Applied Materials very, very, very well. It's been one of the longest standing stocks on the Tackle 25. Only, in fact, I believe Applied Materials has been on there 5 or 6 consecutive years. Apple's up there as well for consecutives. I think Microsoft had to be kicked off one year because we just couldn't get enough premium. It was so good, right? But Applied Materials has just been a very long-standing stock on the Tackle 25, and it's a great covered call stock. This is a zone where Applied Materials is typically, you want to gobble it up, wait for it to get into resistance, and then at resistance levels, a lot of times Applied Materials, it won't V-shape. It will hover, right? It will hover, give you the time you like to write the covered call. I actually really like your a little bit of a scaling in technique to a covered call here. You're looking equity first, saying, okay, if there's 2 steps in the covered call, and I talked about this in the podcast yesterday, if there's 2 steps in the covered call, step 1 is to acquire the shares, right? Mm-hmm. Well, technically, if you're using your technical skill set, this is the zone where you start acquiring shares, right? This is the zone. And so you're looking at step 1, acquiring the shares, and then step 2 would be to write the covered call. Well, you don't have to simultaneously do step 2 while you also do step 1. You can take your technical skill set, allow a price appreciation, and then when it starts to show a little bit of weakness, immediately start writing those covered calls. And so I like the general zone, and I also like Applied Materials bucking the volatility of the last few trading days as well. Outside of Friday's candle, which didn't even, in my opinion, violate the support level, you've really seen an area of the market in Applied Materials that's been doing really, really well, or especially against the volatility of the last few days. So I like this as a zone to start picking up Applied Materials. And the equation of writing that covered call is really simple to me. Number 1, let's let it work up into that 159, 160 level. Let's let it work up. Let's take $7-8 of direction here. That's number 1. Number 2, as it does that and shows a little weakness at 158, 159, 160, write that covered call at that point, right? I like that game plan. Absolutely. It's a little bit of a similar game plan to what we do with bull call spreads oftentimes, right? Whereas like, let's say a directional trader here comes in looking at the same scenario and says, well, I like buying a 160 call option right now. And as the market works to 160, I therefore am going to write the 170 call. It's a little bit of an aggressive scaling into a bull call spread. This is a little bit of an aggressive way to scale into a long-term covered call as well. Picking up the shares at support, writing the covered call at resistance makes a lot of sense to me. The question is, and that's all neutral upside potential, right? The question is, so a stock can go 1 of 3 ways, and you should always have a game plan for each of 3 ways, right? So you're looking at, in terms of the support level, you're looking at picking up. If it goes up, you're looking at writing the covered call at 159, 160. That would be writing out the 165, 170 contract. We just don't know what that would be at this point. The question for me is, what do you do if Applied breaks support? Because if Applied breaks support here, at that point, this pivot has failed. And when you're looking at the Russell 2000, RTY here, when you're looking at the Russell 2000, you had a very similar pivot here at 2300. It failed. You see what the market did after that pivot failed. And so I like the game plan of what you're doing and picking up. I like the game plan of what you're doing if it goes up. I got to know the game plan if that pivot fails, because if that pivot fails, the game plan should be immediately write the covered call.
Yep.
Abandon the support plan. Support was violated, and you got to do something. You got to do something. And so I like also where I like a pre-planned, determined area where you also write that cover call to protect against downside risk here. And I like that if that pivot fails right here at about 142, you got some pretty significant 140 zone. But once again, if you're talking about accumulating the stock at 150, you're taking about 10 points of risk to the downside, the same way you're taking 10 points of return to the upside from a directional perspective. You accept that. You know you're writing a covered call at 159 to 160, and you know you're writing a covered call if it violates support at 142 by 140. That's the game plan. I like it. If I had to pick one of those three, it's Applied Materials. Applied Materials, I think, is in the zone. It's a fundamentally good company. You know the game plan about covered call. We got the upside to the downside. We know the strategy there and the plan there. I like Applied Materials. Kroger, I just think we got to wait for earnings. That's it. I love Kroger from a covered call scenario. And once again, if inflation is going to persist, I think you like food companies. I think you love food companies. And I think you really, really, really love cheap food companies. And so I do like Kroger here, and I like Kroger fundamentally. I like it from a covered call. This is just a really difficult time to report earnings when you have so much news coming into the market on a daily basis. And we're all hot take Monday, Tuesday, Wednesday, Thursday, and Friday in the market right now. And so I just kind of feel we should wait for earnings on Kroger. On Apple, man, I think it's time to open up that puppy and let it run a little bit.
Well, I certainly appreciate your input on that, and I will be taking it into consideration. The Apple one is a little too late. I already got in it this morning, so.
Well, now you're just like, I'm too good. Yep, I get it.
Like I gotta, take the shares or just,
honestly though, yesterday you're dodging at resistance and the entire market is puking up and it's hard to get an accurate read. And then all of a sudden Apple's the only stock that goes up today. I don't think the decision yesterday was bad. I just don't. You got to make decisions in the moment. And in the moment you're sitting at a doji after volatility has hit the marketplace, you're a little concerned about, upward potential. And honestly, guys, I mean, if you were to tell me on this bull watch list from yesterday that we were going to hit some volatility here today, and Apple is the only green stock on that list. Well, actually, Tractor Supply, of course, Tractor Supply. Let's go. But Apple and Tractor Supply. I think I'd be a little surprised with Apple going up 4 points in the face of the market going down 1.5 points. And I think most market participants would. And so, today, honestly, today you're probably making a different decision. Today you're probably making the exact same decision I am. Yesterday, I doubt I would have that much disagreement with you.
I agree. Well, if you like the discussion about covered calls, we're going to have a webinar on this next Monday on covered calls. So the link is in the chat. Make sure you grab that. Subscribe so you can get the reminder when we go live next Monday. Is that going to be at 8:30 p.m., Matt?
I believe I'm doing it at 8. Yeah, I think all of our tackle trading 101 series on Monday. And again, guys, we're going to do this every 2 weeks for our YouTube channel, and we're going to always tackle beginner level content in those tackle trade. Again, the name of the webinar should signify 101. This is introductory level type content, but we know we have a lot of new traders in our community, and we want to make sure that they're getting quality content so that they can build upon that as they get into the pro, as they get into all the conversations we have, including the conversations we have on Discord. Guys, for our pro members, get into Discord. I'm looking at it right now. The mastermind group for the step system. That's our swing trading channel in Discord. popping off here. You guys are kicking tail. Those guys are
You lit
doing
that thing on
awesome over
fire.
there.
You lit it on
Oh,
fire.
oh, I plan on lighting it on fire all the time. I love what we're doing in Discord, and I can't wait to see. Like people are now starting to learn how to use it. This is the fun part. Like at first, it's like Discord. What is it? How do I use this technology? It's overwhelming and scary, scary, scary. Right? People are starting to get to use it, and I like it. I like it. I like it a lot. So you guys keep kicking tail over there, and we will be back with you tomorrow for another edition of the halftime report as well. Later tonight, we got the coaches show presented by Tackle Train for the Pro members. So make sure to check that out as well. If you haven't watched this Step System Mastermind, that is posted there on the website. Let me guys show you that very quickly here so you guys know where to navigate the website. You just go over here to courses, you go down to the Step System, hit that Step System Mastermind, and you can see once that pulls up, there is the mastermind group I did from yesterday. You can definitely check that out. We had a great time talking about stop loss placement, talked a little bit about entry, really spent some time on discussing identifying the support level you're comfortable with on a daily chart. But then the technique is to drop it down into an intraday level to really pinpoint that accuracy. Spent an hour yesterday really kind of going through some stocks on the list. Had some fun. The community was great. If you haven't had a chance to check out the Step System Mastermind, make sure you do so on Tackle Training's website.
Awesome. Well, thank you so much for your great analysis today. Really appreciate it. Mark, thank you for joining us here today. It was a nice surprise to have you here.
Thank you. Very gracious.
We will see you all tomorrow.